Hi everyone, welcome to this live coverage. As usual, I'm here with Yohay Elam from Forex Crunch and Mauricio in the background from FXStreet, helping us to produce this live event. We are here to cover the last revision of the fourth quarter US GDP. So here we are for you. Hello guys, how are you?
Hi Valeria, doing great. How are you?
All
Hi
fine in
guys.
here also. Everything's fine. Waiting for the event, which I actually am not expecting it to be much relevant unless we have a wild surprise, a deviation from the 1.9% we had previously. So I guess the market is rather focused on the Brexit and how the euro area is reacting and what the UK wants and all of that noise. What do
Right.
you think?
Yeah, it was surprising to see last time we covered the GDP and it was no change actually. It remained unchanged at 1.9%. This time we're expecting a small move to 2%. In the past we had significant GDP revisions. They sometimes changed quite a lot from the first to the second to the last revision. So yeah, so maybe low expectations can result in a big move if we have a surprise, but
Yeah,
let's see.
otherwise we are going to get past this report pretty quick, right?
Yeah,
Yeah. The euro is under pressure, right?
right.
That's maybe the most relevant thing going on today. There were some market talks yesterday coming from sources familiar with the matter, saying that the ECB was misunderstood in its latest um, statement in the March meeting because they are not considering tapering. I guess it was a way to stop the euro from advancing. It's clear that the ECB doesn't want a stronger euro, no matter how weak the dollar could or could not be. So maybe it's not the most relevant thing we are seeing today. And I guess a rough of positive data coming from the US can help it to go a bit lower, particularly because it's pressuring the lows, right? It's quite close to the 700 threshold. So I guess that my main focus today is in there.
Yeah. Regarding Eurodollar, we also had the German inflation figure. It came out below expectation, 0.2 month over month instead of 0.4. And
Yeah.
also here in Spain, the year-over-year number, the CPI number missed with 2.3 instead of 2.6. So inflation looks a bit cooler. So if we have lower inflation, there's no reason for the ECB to taper more quickly or raise the deposit rate. So their leak from sources about not moving too quickly came at the right time.
Yeah, in the end, it would help the euro to advance. Statement was higher inflation, but well, that's not. No, sorry, Draghi even said that it was something temporal and that it needs to be sustained in time to talk about easing policy. And these readings are telling us that, well, it's not that sustainable in time. Those positive figures we've seen in January and in December, right?
Yeah, and the change that they made last time was about the using all instruments, and it was regarding the most extreme cases, not about the mainstream path. So they're not worried anymore about the very extreme cases, and that's why they removed it, but not about normal policy will continue. They'll continue buying bonds.
Until 2019,
Yeah,
right?
until forever. But let's see.
Yeah.
Right. So,
Anyway,
what do you think about Brexit? About the reaction yesterday, or lack of?
well, the market reaction actually was not big because we have some wide spikes one side or the other of the market, but pretty much nothing happened at the end of the day. I was actually expecting this because I know that the Brexit was not going to be a matter of yesterday, matter from now on, as we discussed multiple times in the past. Now, the power of a Brexit is in the European Union's hands, right?
Right.
The euro area is the one that will decide the UK destiny from now on, not Theresa May. Theresa May want many, many things, but it's yet to be seen what the euro area is willing to give. The quick response we have from euro area authorities to the letter, that was a bit of a surprise to me. They are really prepared to offer a tough battle, and I'm not sure if the UK will survive it. So overall, I think that the pound is will come under strong selling pressure. Not now, not today, not tomorrow, not next week, but things are going to get rough for the UK and the pound.
Yeah, I certainly agree. I think all in all, the bottom line is Brexit is not good for the United Kingdom because of trade, not good for the pound, and the EU has stronger power. The EU wants to keep the other 27 members together, wants to show that it's better remaining inside than leaving. And just by not negotiating very fast, just by starting real negotiations only in June and maybe real negotiations only after the German elections in the fall, it could weigh on the pound because of the ongoing uncertainty.
Yeah, exactly what I think. I don't see how the UK can now talk about getting a good trade deal or even a free trade deal, not with the euro area, not talk about the rest of the world when the euro area wants first to discuss the divorce bill, right? How much the UK will have to pay. And we're talking about 50, 60 million pounds, right? Something really wild. And billions, sorry.
Yeah,
And the UK says no. So, so far, of course, we are not talking about even getting into the negotiation table, but uh, the euro area, as you said, will want to show its power over the UK now that the UK has decided to leave the union.
exactly. So they'll play it tough, and
Yeah.
yeah, and according to Article 50, there are 2 years for negotiations, and these could be extended, and there could be a transitional deal, but they'll have to have all the 27 other countries in the European Union agreeing to an extension. So, as you said, the ball is in the court of the EU. The EU is bigger, UK is
Yeah.
smaller. So, yeah.
Yeah.
But they already started. Well, Theresa May's today will deliver the Great Repeal Bill, right? It's like a piece of legislation to take the European Union law into, yeah, from the UK. So they are starting.
Yeah. Repeal bills.
Yeah, repeal bill.
That's what we're getting these days from the market.
Yeah, from Trump too. They are trying to push another Obamacare repeal and
Yeah.
replace. Really,
Yeah, regarding the British repeal bill, sorry, it's actually taking all the current EU legislation and turning it into British legislation. So the name repeal is a bit misleading, but so
Yeah.
it's just to
Yeah.
ensure a smooth transition at the beginning. But then, of course, Britain can gain control and change its own laws later on.
I guess they are going to replace some laws about immigration and taxes and that, but not sure if they can do that today.
Yeah, it'll take time.
Yeah. Anyway, that time is what we were discussing earlier about the pound suffering from now on in the coming years and depending on negotiations headlines rather than macroeconomic data. Of course, if macroeconomic data in the UK begins to be disappointing, well, that will be further pain for the pound. So from now on,
Okay, guys, just moving to, we are 5 minutes to go.
yeah,
What are the expectations today for the growth? Yeah, the GDP and also for the other data that we have. Remember that we have jobless claims too.
yeah. As we said at the beginning, there are not big expectations. The market is expecting a small revision from 1.9 to 2.0%. So actually, such move won't be affecting the market much. Of course, if we have a large upward or downward revision, dollar will probably reflect it. Uh, Still, it has to be a huge deviation to see strong movement. I don't really expect this to be really big. And regarding unemployment claims, we have an uptick there, and a pretty interesting uptick, a negative uptick last week, right? But still, we are seeing levels from 1970, record low. So actually, I don't expect them to be really um, negative enough for the greenback, right? I don't know. It maybe we have 300 or something wild like that. Of course, it will affect the dollar. But as long as it stays in between 240, 260, it's among normal, right? And therefore should not affect the currencies that much.
Yeah, it's also high frequency, well, relatively high frequency figure released every week, and there are fluctuations to the upside. Expectations now stand on a drop from 261 to 248. Within this range that you mentioned, we will, as I agree, we would need 300 plus to ring the alarm bells, the red alerts that the job market in the United States is really is turning to the worst, but otherwise it's just the normal fluctuations. So this is today the third and final read of GDP, but each year, I think in July, we have further revisions to GDP. Of course, usually the first release for every quarter matters much more than the revision, especially if the revisions are small.
I was thinking that next month we will have the first reading or the anticipated GDP figure for the first quarter, right, of 2017. So therefore, that will be usually more relevant because it has more impact because it's an unknown ahead of the event.
Yeah, it'll be towards the end of April. Towards the end of April, we'll also have the first round of the French presidential elections. And yeah, these are big events.
Elections will probably take much more relevance than US GDP.
Yeah. So 1 minute to go. Euro dollar currently 107.40.
Yeah.
And again, expecting a small tick up from 1.9 to 2%.
700 region in between 690 and 710 is a huge support area here as Fibonacci has a lot of intraday highs and lows. It has been a bullish breakout once the pair broke above it and a bearish one when it broke below it. So that's the level we are watching now. In the case of we have a 2.5 or 2 point something above 2.5%, something really wild or even more. Not sure.
Okay, numbers coming out.
Yeah, remember guys, we have a bit of delay.
2.1, 2.1.
Okay.
Small revision, small surprise.
Yeah.
Better than expected. Well,
yeah.
Better than we got before.
Slightly better than expected. The only one reacting seems to be the dollar Japanese yen, which is some 20 pips higher after the news, but not much more going on in there. Core personal consumption expenditures were better than expected, also slightly higher. Jobless claim 258. Seems that we have another bad reading. Yeah, we have a bad reading there, matching previous week number and above expected.
Yeah, so the 4-week moving average for jobless claims is also naturally moving higher because we had a few disappointing reads of higher than expected jobless claims.
Yeah, but as I said, in between average, right? So probably helping the dollar yen to advance a bit more, but in fact, the euro is shedding some pips as well as gold. And the euro is behaving as a safe haven, right? Gold and the yen, yeah, and gold and the yen are easing with the news, and the euro is tracking them in slow mo, but it's tracking them.
Yeah, euro is a slow mo, like the European Union.
Dollar Japanese yen seems to be advancing, but I was thinking that we have those former lows in the 1160 region, right? Let me change to the daily chart. The year low, the pair bottom multiple times between February and March, early March, around 1160. So unless we can move above the level, the upside seems really limited for me.
Yeah, it's a big level.
So that's a huge level, and we are 30 pips away. And I don't think the data just released is strong enough to push it higher. Still, I will make a point about the Japanese yen, and that's it. That it has been moving with yields, with U.S. yields, right? Every single yen cross has been responding to yields behavior and nothing, pretty much nothing else, right? So if
Yeah, not
dollar,
Japanese data, that's for sure.
yeah, yeah, if so, if treasury yields rise, then the pair goes higher, and if they fall, then the pair goes lower, and that's it. Not much more to do with yen and yen cross, as they say.
Yeah. More data from the GDP release. Consumer spending is now 3.5% instead of 3%, so that's positive, of course. It's considered good growth. Sales 1.1 instead of 0.9. Yeah, core PC a bit higher, 1.3 instead of 1.2. So, well, all the figures are sort of a bit better than expected.
Yeah, but I guess the poor jobs data offset partially the positive headline from GDP. And besides, as
Yeah.
we said earlier, it's been the second revision, right? We have an advance, a first revision, and this is the second revision, meaning the third number. It's hardly to say it surprised the market.
Yeah, I think last time we expected an upwards revision from 1.9 to 2.1, or maybe 2.2, and it was a disappointment at 1.9.
Yeah.
So I guess we got it this time. But anyway, the changes are not that big. Sometimes in the past we've seen changes from around 2% to 3.5%, or
Yeah.
bigger waves.
I remember one of above 2 to 0.8 a couple of years ago. That was it was really, really bad revision in that market.
So hey, why the United States report that kind of annualized number that as far as I remember it's just like taking the quarter and then multiply by 4. It's only that. Why they do that?
I don't know. Ask them.
Yeah, me neither. I don't know why. That's just the standard over there.
Yeah, I don't know. There's, I don't know. You know, a couple of years ago, I do believe that they make a revision of how they estimate GDP, adding or and retreating some kind of different goods, adding art and so on. But actually, it's something that depends of each country and each government. So, well, maybe we have to travel to the past and ask lawmakers a couple of centuries ago why they decided.
Yeah, in many other countries it's quarter over quarter, and
Yeah,
of course year over year, which is not annualized, just the change from 1 year ago. So these figures can be sometimes confusing when you want to compare them to each other. Also, for China, usually have reports that are.
They have?
Yeah, well, if you believe the numbers
Sure.
are also annualized.
I wasn't
Yeah.
pretending, sorry.
yeah.
Okay, so we got a breakup in oil, right? Now, Valeria?
It's trading a bit higher, yeah, challenging 50. There was some positive data from US stockpiles yesterday as they grow less than expected, right? But still, U.S. prediction is at record heights. I guess the rally is being backed rather by interruption in delivery in Libya because of those sort of terrorist attacks the country has, rather than anything else. We also have the OPEC discussing the possibility of extending their output cut deal beyond June, right? But still, overall, the market is concerned about increasing production in the US. So, not sure if the commodity could regain and rally beyond 50. Today, we have gas data coming from the US. If that's positive too, meaning the US added less than expected cubic meters, sorry, then that could fuel a bit the commodity. But 50 is a major psychological level. I'm not sure if it can handle to stand above it and even advance beyond it in the current macroeconomic scenario.
Yeah, US production is generally on the rise. And yeah, we also heard some news that OPEC and non-OPEC countries think of extending the deal, but nothing is certain. And there's also a difference between agreeing on cutting production and actually cutting production. So I also don't see much room for an upside in oil.
In between that, Russia said that it has to think about it.
Yeah.
So
right. So, quite a nice bottom there at $47 a barrel on WTI crude oil. Triple bottom.
okay, since that gold and yen here means a bit retracing modestly. Really not much going on. Seems that all the excitement. I guess the market is quite human in the case in the thing that we have all of that adrenaline contained ahead of a Brexit and explode yesterday, and now we are okay. What's next?
Yeah.
So pretty much that's the sentiment today across the market. Making a pause ahead of the next big trigger or a new catalyst, or we don't know where it will come from. As lately, it's not about macroeconomic data, but about politicians talking, right?
Yeah. So yeah, we had last week's big political event was in the United States with as we talked before, the repeal and replace that totally failed. This week it was Brexit. Let's see what comes out next week. It's the end of the quarter as well, so we might see last-minute moves, but sometimes nothing happens.
You're right. Tomorrow is the last day of the week, the month, and the quarter. So it's profit taking. Tomorrow could be huge and see some contrarian moves across the market. Beware of that. I was checking my daily calendar, and there seems that President Trump is going to unveil, not sure if today or tomorrow, its infrastructure plan. You heard something about that? Not sure if that's.
Yeah, he met with Elaine Chao, she's involved, transport minister, about $1 trillion for 10 years, which sounds like very round numbers to me. Sounds more like campaign promises. We'll have to see some details. Yeah, there was talk that some of the money will come from, will be private money. And so that, of course, will be a good thing for the US dollar. More spending, higher inflation, higher interest rates, higher dollar. But so far, it has been sort of at the bottom of the pile. He had healthcare before that, taxes, and other things on his non-economic agenda as well. So I don't see that coming.
I'm reading the Reuters release. It says that it will release infrastructure plan later this year, right? So it's not like going to happen today.
Right.
My wrong.
And taxes, I think, come before that.
Taxes are supposed to come in the summer, right?
Yeah.
Oh, quiet silence from our friend Donald Trump.
Was another piece of positive news. Also, it looks a bit vague, but according to a report by the Wall Street Journal, the Trump administration wants to make only very modest changes to the NAFTA agreement, the North American Free Trade Agreement with Mexico and Canada. And that's a bit different from his rhetoric about, yeah. So that's also positive because markets favor trade. So
we have to be quieter right now. Okay,
The only thing that is sure is he will try to repeal something.
yeah.
Okay, the virtual machine it's advancing a bit, but besides that, oh, the euro fell down to
Yeah,
7.22.
reaching
Okay.
new lows. So we're at the lowest levels, well, since not that long ago, since March 20th.
Yeah.
But anyway, it's quite a climb down from this move to the top side to above 109.
Yeah.
What's your opinion on the euro dollar, Valeria?
Well, it's tough, it's tough because I see that the dollar, it's generally weak. I can see that. But I also see the ECB struggling to push it lower. And this huge retracement from 900, it's telling me that there's not that much buying interest as we could have suspected a couple of days ago, right? So overall, I do believe that if we take the aeration, turn to the 590, 600 area, still, I'm not seeing the pair back in 340 as I used to see it a couple of weeks ago, right? I do believe that we will see higher lows in the upcoming month. I can't see a break lower.
Yeah, I think that we talked about the upcoming months. I think one of the things holding down the euro is the fear of Le Président Le Pen. And there's, of course, a low chance, but if she becomes president in France, that will have a huge negative impact on the euro. And once that fear moves away, I think the euro has much more room to the upside because the economy is improving and there's disappointment, sort of an undoing of the Trump rally. So I think there's room to the upside. Okay.
And what your opinion in gold?
Well, to be honest, I do believe that the current downward corrective movement we're seeing is just not a downside correction. I still believe that the commodities overall bullish because the market has already priced in any upcoming Fed move. It has been dependent pretty much on the Fed for a couple of years. But now that we are know for sure, sort of speaking, right, that the Fed will raise rates maybe 2 more times this year, that matter is out of the table when it's trading gold. And the high political risks we are seeing, uh, French elections, German elections, the Brexit, Trump and his promises and his policies, everything, all that background is backing demand for the safe haven gold, particularly because it was not long ago that it was near a production cost, right? 1100, it's production cost. So falls below that area seem quite unlikely from now on. Overall, I sustain the upward potential of metal. Of course, we can see, sorry, this kind of downward corrective moves. And today, I believe that 1230 is the level to watch. As long as we held above 1230, the downside potential will be quite limited. A move to that this area could be understood as corrective and probably attract buying interest. And of course, we need to take this February high 1263 or so, yeah, 62.94 to confirm a new leg higher towards 1300. And that's in the long run. Now, in the shorter term, seems that we are going towards around a downward corrective movement. So yeah, above 30 seems a probable bearish target for today. If we see further dollar gains against the euro and the yen particularly.
Yeah, gold managed to recover thanks to the dovish hike.
Yeah, dovish hike.
Yeah.
The market is providing us with new words daily basis.
Yeah. Brexit.
Repeal bill.
Yeah.
Okay, so we got a question here about the Australian dollar. It's from Diego Carvajal. Is any comments on the AUC, Valeria and Yohay?
Okay, Yohay, you want them?
Australian dollar has been frustrating for quite a long time. It used to move a lot, and now it hardly does. Over to you.
Well, I do think that
Repeal
it.
Yeah, it has a comfort zone between 76 and 77. Honestly, if you take a look at bigger time frames like the weekly, for example, you'll notice that any kind of spike beyond 77 has been quickly reverted since April 2015 or so. So the 77 level is a huge barrier that it won't be easy to take. And given that the Australian economy is not performing as well as to support a sharp rally in year, I do expect that 77, 76 range to hold, with spikes beyond 77 being a chance to sell, and falls below 76 a chance to buy. And as Yohay said, it's quite frustrating because there's not much more to do in here. But that's what I'm seeing. And take a look what happened today. We have been trading as high as what, 76, 79, approaches to 77 to get down. I'm keeping an eye on copper prices because copper is affecting a lot of the OC this week, but still the movements that we are seeing in the cross are barely relevant, right? And the other thing that is affecting the OC these days are stocks. No, if you notice, it has been moving contrary to European currencies or the yen, because it's moving alongside with stocks. If stocks rise, the Aussie dollar rises because of the rise in mining related equities. So it's a big mess going on, but the result in the pair is quite poor. So not paying it too much attention. I would like it to see above it 78.30, which was last year high, or below 74 to talk about a trend in year. And actually, I'm not expecting that to happen anytime soon.
Yeah. Next week we have a few events. We have the RBA decision, but they're very, very neutral. So, well, any move can be maybe move the Aussie. And we have at the beginning of the month, we have also retail sales from Australia, and we have China's manufacturing PMI. The independent when the Caixin manufacturing PMI is watched by all the world as a measure of global growth. And for Australia, it's relevant because of demand for copper, for iron ore. So let's hope next week, if all figures go in one direction, we can have more of a trend here in Aussie dollar.
Employment, and maybe not next week, but the other could also affect the pair. But
of course,
I'm not seeing much of a trend going on in here. It's just the comfort zone between 76 and 77, and playing those 6 streams.
Yep.
Okay, guys. So, what do you think to wrap up, to make the final statement?
Okay, yeah.
Okay.
Okay, there was, as we were expecting, US GDP reading came a bit better than the market forecast. 2.1% final growth in the country for the last quarter of 2016. It was a bit better than expected, as I said, but not enough to revert or to trigger big moves in the market. The dollar is wait and see mode right now. with uneven results across the board because the market is focusing somewhere else, right? In stocks, in political woes, as we discussed earlier. So center stage, it's there and not in the greenback today. And the data was not enough to move the market. The safe haven or related assets seems to be the one suffering the most, with gold and yen easing partially, but not at fresh uh, weekly lows, so not much of a relevant. And the euro, it's also weak, but particularly because of the ECB talks that surged yesterday on Wednesday when tapering was condemned by people familiar with the matter. So overall, I guess that the upcoming American session is not going to bring much data. So I believe that currencies will react to stocks rather than anything else, and any political headline that may surge. We're not expecting big ones, but well, these days you don't know.
Yeah. So I'll only add that we have GDP sort of in very much in range. Minimal surprise, the new normal of around 2%. You can see it as bad growth because it's too slow, or good growth because it's not too fast and not a bubble. As Valeria said, not too much to move the market. What could move the market in the next 24 hours or so could be end of month adjustments, end of quarter, end of week. We're approaching the end of Q1. It's also the end of the fiscal year in Japan. So maybe we'll see stronger moves on the yen. But maybe markets have already priced in those moves. Maybe it's already behind us. I don't know. And next week should be much more exciting with really top-tier figures. Full build-up to the non-farm payrolls is beginning on Monday and until Friday. So hopefully we'll have bigger moves.
Yeah. Okay. That has been great to be with you guys, as usual. I really enjoyed this. I'm going to meet you on April. See you back in May.
Yeah, because
Enjoy your trip.
yeah, enjoy your trip to Japan.
Yeah, I'm traveling. I'm having vacations, and I'm not sure if I could be to coverage, but I'm coming back on the 26th. So pretty much all the months gone. So
Okay.
see you back
Okay.
in May, guys. Enjoy.
Okay. Thank you, Valeria. Bye bye.
Thank
See
you.
you.
Bye-bye.
Okay.
Thank you. Safe trading. Ciao.
Ciao. Bye bye.